Ladies and gentlemen, welcome to another edition of In the Pit with Lobo Tigre. Our victim of the day is James Hesketh. He's the CEO of Viva Gold, a relatively new addition to the exploration going on in Nevada, which is seeing something of a renewed gold rush. And interestingly enough, a lot of activity going on in southern Nevada now and around the town of Tonopah, which many of us have driven through on our way to other mines. And now people are exploring there, in particular Viva Gold. So, James, why don't you go ahead and tell us what you're working on, why Tonopah, and then I've got some questions for you.
Yeah, we're working on the what's called the Tonopah Project. It was an earlier name for it was the Midway Project. We acquired this asset from Midway Gold in 2017. That was the estate of Midway Gold. The project we found very attractive. It's number one, it's had a list of very reputable operators on it in the past. The primary discovery was made by Kennecott Exploration. It was a blind discovery on the valley floor, which for those laymen, that means that there's no outcrops on this property. It's covered by gravels and sand dunes. And the discovery was made through the use of geophysics and field geology in the hills around it. Anyway, they discovered what we called a discovery zone, some very high-grade material, and they continued to drill, did about 130 drill holes. And, Kennecott eventually moved out of the gold exploration business and focused entirely on copper. That was around the time Rio Tinto acquired them. They were followed up by Newmont Mining, who explored on this property as part of a Walker Lane portfolio trend program. They drilled about another 150 drill holes. So we had two major operators on it. They did all the things that majors do. We have an extensive database of geophysics. We've got at least 8 types of both ground and air-based geophysics on the property. We have soil geochem, soil gas sampling, rock chip sampling. We've got, you name it, we've got it in the toolbox. We also inherited, as part of this project acquisition, a database containing almost 90,000 meters of drilling. That's both core and RC. So this is a project that has seen extensive exploration. With that said, we still believe that the exploration potential is quite wide open. We've got a lot of indications of that from the geophysics as well as the field work that was done. Now, the drilling that we have extends well beyond our property positions for miles in a number of directions. It was part of a portfolio program. After Newmont, Midway Gold came in, and Midway focused on this project. There's some very high-grade zones within it, and they took a look at that as a potential underground project, and they drilled those high-grade zones to a high level. Today, about 2/3 of our resource is measured and indicated, and the core of this, the highest grade core, the measured material, is drilled to within 25-meter centers or less. So this is not an arm wave that we're dealing with. We have substantial data-backed substance here, as well as data-backed exploration potential.
All right, so sorry, let me jump in, and why don't you tell us a little bit more about Midway, because I think a lot of my viewers or readers, particularly those who were with me in the past when I worked for Casey Research, they'll remember the Midway story. So what went wrong? And if this was any good, why didn't it work for Midway?
Well, Midway worked on this project. This is actually the original namesake property of Midway Gold. This was called the Midway Project. And one of the things that went wrong for them on the project is that they had a horrible deal structure with the underlying landholders. When we acquired the project, there was an index royalty on it that went to 7% NSR at 7% at $700 gold price.
Wow.
So the original deal was created back in the 80s, and Midway was never able to restructure that deal. So the economic potential here was always overhung by that. And that's what drove them to look at the high grade and the underground only, because they could operate that with a very high cutoff grade that would work. Unfortunately, that high grade core is only 15 to 20% of the deposit. So when we were able to renegotiate the royalty, we did that as part of our acquisition. We assumed from the bankruptcy court the liabilities owed to the underlying royalty holders, and we actually gave the underlying royalty holders 10% of the shell company that we used to acquire the asset, in exchange for reducing the royalty to 2%, and we have a 1% buyout option for $1 million. That's evergreen. We can exercise it at any time in the future to reduce the royalty down to 1%. Now, what that did is it changed our economic view. We were able to drop cutoff grades and bring in the low-grade envelope in this deposit, and that added 80% more ounces to the overall target. And that's simple mathematics and engineering, and I am a mining engineer, not just a rock licker. So that is the important point. We're able to look at this thing as a business.
Right, and that changes it to an open pit model, and it all starts to make more sense now. I understand. Just real quick before we move on from history, and just to clarify the situation, this has nothing to do with the deal with Ely Royalties Properties, which they just optioned to BlackRock. They were calling it Tonopah West. That's something else somewhere else, or maybe nearby, but it has nothing to do with what you're doing?
That's absolutely true. That Tonopah West is actually in the town of Tonopah on the west side of town. Our core shed and office is actually over the top of some of their claim position. So is Main Street. But that's a deeper target in the historic town of Tonopah.
Is there, this may be neither here nor there, but is there a quick answer to why suddenly Tonopah? Like I said earlier, it was famously the place that you spent the night on your way to go somewhere else to look at a gold project, and now it seems like the area is really heating up. What do you attribute that to?
Basically, there's a tremendous mineral endowment in this district. It's part of the Walker Lane trend. For instance, our project, just on the road that we access our property from, paved highway 371, that's the road that runs up to Round Mountain, runs right through our project, and we're only about 20 miles from there. But Round Mountain is a 20 million ounce deposit and produces 500,000 ounces of gold a year. It's Kinross's flagship property. Around the town of Beatty, you have right now Anglo American has a new discovery there. You have Core Mining came into the Sterling project. You've got Corvus has their projects there. Bullfrog Gold, and those projects are all around the old Bullfrog mine, which was operated by Barrick, and before that, it was St. Joe Minerals in the beginning. That goes back quite a ways.
Quite a ways.
There's been a number of mines in the Goldfield district around the town of Goldfield, about 20 miles to the south. You've got West Kirkland, just south of town of Tonopah. There's a plethora of projects that are being drilled on right now throughout the district.
Yeah, I just find that really interesting. Particularly, like you mentioned, Goldfield. It's kind of I'm not saying the project is a joke, but it's funny because it's this tourist trap with all these little old mine derricks around where you would stop, and buy a trinket or something, and then you go look at a real project somewhere else. So it's really interesting to me to see this all heating up now.
Actually, Waterton Resources is currently relocating in Highway 95, the main highway between Rio and Las Vegas, and moving it around their Gemfield project. They got full permitted approval to do so. So the highway relocation is underway for their mine development action. And that'll be about a 75, 80,000 ounce a year producer, open pit heap leach.
Okay, all right, so let's talk about your project. And you have done a preliminary study. We have 36 million after-tax NPV, 22% IRR, producing maybe 40, 50,000 ounces a year. The conventional wisdom in this space is go big or go home, and this doesn't seem to pass that test. What's the vision here, and walk us through that scenario, please.
Yeah, well, number one, what we're in is called the mining business, and it's a business. It's not just an arm wave at building ounces in the ground. You can make cash flow mining gold. And what we've been able to demonstrate is, yes, those economics were produced at $1,400 gold. On the $1,700 sensitivity, the NPV 5% before taxes, 96 million, with an IRR of 47%.
Yeah, I never look at pre-tax. I give you the sensitivity, but I never look at pre-tax. Taxes are not optional.
Well, taxes are not optional, but if you you take 21% off the tax off the top, there is no income tax in the state of Nevada. There's a 5% severance tax. So take 26% off the top, and that's 100% tax load with no depreciation. It's going to be less than that. But the bottom line is that most of the companies that come in have extensive tax loss carries. Viva itself does not at this point in time, but we may or may not be the developer. So
yeah, I understand what you're saying.
After tax is a bit of an academic question. Depends on your tax structure. What we see is the potential here for 40 to 50,000 ounce a year producer. And at current prices, that's an $80 million a year business. And if you're making a margin of 30 to 40%, which at today's prices we can look at, then you've got a very nice cash flowing business that you can use that to grow and acquire a lot of these other projects from. So is it companies in that boat, Fior Mining, Northern Vertex, there's quite a number of properties producing in Nevada. Now, the other thing about Nevada production is that we have paved road access directly to our site. I've got a picture in my files of a FedEx truck delivering to the drill rig. You don't get that in the Golden Triangle or in the Yukon or in the Andes. We have a power drop 3 miles from our site on the Nevada grid. We've got town water utility, their well field, about 3 miles away as well. We can acquire water quite inexpensively. So you have all the infrastructure. All day long, running up to the Round Mountain mine, we have fuel trucks, powder trucks, Caterpillar supply trucks. Logistics are fantastic. you don't have to build all the infrastructure that you have to do on the remote sites. Therefore, you do not need as many ounces in the ground. Now, that's for the development side of our project. The other side is the exploration potential.
Okay, sorry, before we get to the exploration, I do want to ask you about that. Why is the IRR only 22% in the base case scenario with all those advantages? I wonder about that. And actually, now that I think about it, I believe I was actually on the project with Midway back in the day. And yeah, we drove right up. You didn't even need boots. You could go there in your sneakers. And I remember all the production advantages it had. And now you're looking at an open pit. So, and the capital is modest. What are the factors constraining the IRR at the base case?
That IRR, number one, it's at $1,400. The other aspect there is that we acquired 100% of the mining fleet, 100% of the crushing equipment, 100% of the equipment is brand new in there. Sensitivity studies moving forward will include contract crushing, contract mining. So, we have these options of acquiring 100% new, buying used. In these locations, you can also bring in the contractors. So you eliminate upfront capital, add to operating cost. So all of these trade-offs are in front of us at this point in time. And those will be trade-off studies into the future. This is a PEA. We used to call these scoping studies.
Right.
And it's your first crack at doing the economics. Now we can see how to improve the economics moving forward. And I guarantee you, over time, this project's these economics will do nothing but improve, and the project will get larger.
Okay, if you're going to guarantee me, you do need to wave your arms saying that. So,
we also designed our resources were designed inside a $1,600 Whittle pit shell. So that's confined shell. You lose about 5% when you put in the ramps. But that was 50% larger than the $1,400 case that we used on those PEA economics. So we do know that it's going to grow at least 50% more. So what you're looking at is a case that is constrained by what we can disclose under, regulatory guidance.
Understood. All right. Yeah. So let's talk about, I was going to say let's talk about exploration, but first, before we go there, let's clarify. The company's goal here, is it the goal to put this into production and then use the cash flow to explore for more, acquire more? Or is it the goal to go ahead and drill the obvious targets, which we're about to talk about, try to make it bigger, and then come to a plan on production?
Well, first off, in order to convert the inferred material within the pit shell to indicated, we have to do additional drilling. Now, I've already talked about the fact that the core of this is already at measured and indicated level. And the inferred that's in the PEA is on the outer margins of the pit. So as we drill that, that's going to expand the inferred material. And so naturally, just doing infill drilling will expand the pit. That's probably putting us halfway towards the 1 million ounce mark from where we're sitting.
Sorry, let me jump in on that, James. I also noticed there's an increase in grade with the increase in confidence level. Would you expect that the infill drilling would also have a positive impact on grade as you upgrade those ounces, or is that actually a result of those high grade zones that Midway drilled?
We have a whole series of high-grade zones in this. There's about 10 of them at least identified so far. So as we can do infill drilling on the less drilled higher-grade zones, we'll get a mixed bag. And as we move through the mining plan on this PEA, we saw high-grade come into the plan. We've got a lot up front. but we also get it in later periods as well. And we did do a design on a $1,600 pit, and we saw a new high-grade zone, deeper zone come in year 7 and 8 in that plant. So as we drill these higher grade zones, and that's a function of the geology, mineralized splays that cross-cut a lower grade mineralized blanket, those come into the plan. So we can anticipate more of the same as you move ahead. And the really unique thing that really attracted me to this project was the fact that the high grade on the real core of this is within 10 meters of surface. So
sorry,
that's your starter pit right there.
Excuse me, 10 meters of surface or 10 meters of under the gravel?
Under the gravel. That's where the mineralization starts. So you don't even need to blast that gravel. You can rip it with a dozer. So you have early access to grade, and then you have continuing grade showing up throughout time in this project. So it's an ideal mining scenario. So to answer your question, through the development process, you will add more ounces. I have no doubt about that. Now, do we want to do additional exploration? There's a number of targets out there I want to test. So what comes first, the chicken or the egg? Do you move forward on your known development project, or do you spend money on the exploration? The allure is to try and do both if cash is available. But you have to prioritize, and quite likely I'll be targeting the development work up front, but doing judicious step outs as we're doing the infill drilling to continue to increase the resource before it ever hits production.
All right, well, that's fair enough. So we have a clear mission then. We prioritize the development, but if funds are available and personnel and everything, then we can try these step outs. And would you go straight to trying to connect the dots between the current discovery zone and the Midway Hills area where there was some past success? I noticed on your presentation on the website, there's a very interesting diagram showing the main deposit in the Midway Hills area, and there are a few drill holes connecting the dots there. So it seems like you know what you're looking for between there, and that's a significant distance. On the other hand, you know, it wasn't lit up with high grade or anything. So, you know, walk us through that, will you?
The intercepts that we have along that trend are mainly a result of, it's mainly the result of lower grade mineralization on the underlying argillite and tertiary volcanic contact, which is a lithology contact, but that contact zone created, it's very porous, created great plumbing for mineralization. And then what we try to do is we try to identify structures that cross that contact, and that's where we get our highest grade materials.
So is there thickness there? Is there tonnage there? Or is that just sort of an interesting feature that connects these two deposits?
No, in areas, some of those areas along that contact zone, we get 30, 40, 50 meters of thickness in there. You know, we've had drill holes of 100 meters sort of thickness in places. So it all depends, and it's all dependent on the porosity and the plumbing systems available. But we do have a huge amount of land here that we can work with.
Okay, so why don't you go ahead? That's one target. What other? If you had not unlimited funds, but if you had plenty of funds to explore with, what else would you look for besides the connection with Midway Hills?
Yeah, in our presentation, there's a slide that shows the open extensions on the structures. And where we see our primary mineralization is where these big structures come together. And this is all part of the Walker Lane structural belt. We have the main Rye Patch Fault, which runs through our project and all the way up to Round Mountain. Round Mountain is in exactly the same rock formations as our project. We have the underlying argillites, the older rocks, that's Ordovician age, overlain by very young volcanics. And these are volcanics are pumice, it's tuffs, it's greywackies. This is volcanic ejecta. And then through these main faults, the solutions came from the earth, they hit the contacts and spread out. And then we have later in the faults themselves and in breccia pipes, these high-grade zones. And the highest grade in our database, the highest grade intercept we have is 1.5 meters at over 3,000 grams per ton.
Is that the picture with the gold seam on your presentation?
Yeah, I mean that's we get free gold here, and we get a high nugget effect in one of the grade populations. The lower grade population associated with the contact is running about 0.8 grams per ton. The high grade population averages 10 grams per ton. So when you look at our drill hole results, we've announced in our drilling since we've owned the property, we've announced intercepts as high as 132 grams over 3 meters.
Yeah, I've noticed that, and I was wondering, it seems so variable. But you know, if you do have high-grade structures surrounded by low-grade halos, it's not terribly uncommon. But I do have a question about the big picture you're painting here. I noticed that slide 2, and you've got the Discovery Fault. I'm looking at it now. It intersects the Northwest Fault, and that seems to be the area of the densest drilling. There's a bunch over by where the Northwest Fault hits the Rye Patch Fault. But then that's kind of it. It sort of fades out there. I mean, what would the next thing to be looked for? You also have a Western Fault where that hits the Northwest Fault. It looks like there's some activity up there, but not a whole lot yet.
Midway Hills is.
Okay.
We just gone back and re-looked at that West Fault, and to the south of our project, there's a section that we own, and I looked at some CSAMT where that West Fault comes through there, and boom, you've got a big resistivity high right there where that fault comes through. And that's where these resistivity highs, we've got it's an appendix slide in our presentation. You'll see that we've got the known gold zones over the top of CSAMT results. And we get a strong correlation between the resistivity highs and our gold deposition. And that's been very useful here. But I've gone back and looked at where this West Fault on projection would cross into the project down on the south end. And I'm seeing those resistivity highs right where the fault comes through. You can see the displacement in there. And there's no drilling at all.
Okay. Brilliant target. I get it.
Yeah, so we've got these targets. Along that West Fault zone, you'll see there's actually some grade shells that are showing up in the model on that West Fault zone, and you can see it in the topography where the zone would come through too. But the bottom line is we do have some intercepts along there, but they're kilometers apart. So there's your upside. You've got the Northwest Fault. There's over a kilometer there. You got the West Fault. There's kilometers, multiple. The south end of the Rye Patch Fault, where the Discovery Fault and the Dauntless Fault and those other faults will connect back in. Limited drilling in those areas.
All right. Yeah, we can put a link to this slide here or to the presentation for people watching this. This will be slide 8 for you viewers out there. We'll put a link below. Slide 8 has the the faults in the drilling that Jim is talking about here. But speaking of drilling, Jim, and we probably should move along. We're going on half an hour here. I noticed in your slide about what comes next, there's not a lot of drilling planned, 3,000 or 4,000 meters planned for this year. Is that because you're cash constrained and you need to raise more money, or is that just because you're looking at some high priority infill targets first, or what are you going to do this year? What are the deliverables for shareholders, and what's that going to cost?
That 3,000 to 4,000 meters of drilling, that's about $1 million program, will be focused mainly on the northwest end of the known zones. That's where the bulk of our inferred mineralization is, and that's wide open heading towards Midway Hills. So we do have a number of drill holes up there that were too far apart to bring into a resource. So we would plug that for infill. Very strong indication that the deposit continues in that direction. And, the Midway Hills, we did drill about 5 holes there at the end of last year and had some amount of success. We're understanding the structure better there now. And I think we can better define our targets in that direction. Going to the south and east, we have a number of zones that, again, don't necessarily pull into the resource because the drilling is too widespread. So that is judicious step out with infill drilling. And so that's how I see making the project bigger fairly immediately, but with not a lot of large expense. I mean, most of these holes are between 150 and 200 meters.
I get it. Okay, so basically what I'm hearing is that the plan is we know where the low-hanging fruit is to try to make this bigger faster. And then I guess on the back of that success, which you seem very highly confident of, then we go back to the market, raise more money, and go after a bigger program. Is that right?
Absolutely, yeah. And, in the meantime, we're going to address some of the long lead time items. Updating the baseline water studies and things like that. You have to have time series to move towards permitting. So there's a number of items that you move sequentially, and while you're doing drilling, you're also doing capture for metallurgical sampling. You're also doing some of those core holes will probably be oriented core for geotechnical. So you can kill a number of birds with one drill hole, so to speak.
All right, okay. And you say that drill program would be $1 million. You need some G&A. Do you have the money for this in hand already? Are you good for now?
We have some money, but we're going to need to raise.
Okay. Well, I'm not a broker, so I can't say, count my guys in or anything. But if you did do a raise, would there be room at the table for retail, or would it be likely a broker deal?
Now, the bulk of our shareholding is retail, and we'll be going back to the retail holders, particularly our existing holders. But we always try to leave room for that.
All righty. Well, let us know when you do. I have a lot of readers who like private placements. They've been listening to Rick Rule go on for years about full warrant 2 years. I understand if you can raise money on more parsimonious terms, you have a fiduciary obligation to do that. But I think if you had more generous terms, a lot of our audience might be interested. On that subject of the money, I have to ask you the question I always ask everybody, and that is, how much of your own money have you put into this deal? If you're going to tell me as an investor I should put my money into it, then I want to know that you have skin in the game, sir.
Yeah, personally, I own about 8% of the company, 2 million shares. And I've also put in the last 3 years of sweat equity in building this company from scratch. So I am very heavily invested, both emotionally and monetarily. And I live in the U.S., so when I get those shares, I've got to pay taxes on anything up front. So.
All right. So, and sorry, the 2 million shares, did you pay for those, or were those options that were granted when you became?
That was primarily in lieu of salary.
Okay. Well,
So that's through sweat equity.
yeah, yeah. No, well, yeah. I think it goes beyond sweat equity. Sweat equity is, burning the midnight oil, and yes. But if you actually forego pay, I think I would give you a little bit more credit than just I worked hard on it. So that does count for me. All right. Well, that's very good. I think I have a pretty good idea, and you have succeeded in making me much more interested in this project than I was at first. I have to admit, I was pretty much thinking this doesn't seem big enough to matter, and now you've raised it up on my radar. So that sounds good. Any last points you want to say before we call it off?
Well, look, Viva Gold, we only have 27.2 million shares outstanding. So,
I did notice
gold,
that.
gold in the ground. If you take a look at our market cap, it's about $22 per ounce of measured and indicated resource. So, in this market, that's quite a bargain. And we anticipate being able to value add what we have considerably. So I believe that this will be a highly accretive play to the shareholders moving forward.
And you didn't even wave your arm saying that. Okay, very good. James, you've been a good sport. I understand. I will be watching this, and I'll be, please do keep me in the loop. I'll be curious to see what the truth machine turns up.
All right, very good. And we're trying hard to meet our commitments here.
Okay, well, good luck and take care.
All right. Hey, and thank you very much.